Right now, the markets are very volatile. We've got a crisis that's broken out in the Middle East, and markets don't know exactly what to do right now. We've got precious metals going down despite being safe haven assets. Oil up, the US dollar somehow strengthening, and all this, and you're probably looking at your portfolio and seeing it in the red. So, in this video, it's a reminder to everybody in what to do when we're in periods of crisis when investing money. So before we get into it, I just want to go over a bit of context. So essentially what's happened is, as we know, a war's broken out between Iran and America. And one of the key oil production points where oil flows through and is delivered is the Strait of Hormuz. Now, essentially what's happened is this point is closed off as it's considered too risky to move oil between there, as Iran may attack ships that come through that area. And no longer are these ships being insured by companies. So there's no point going through there on a risk level and on a cost level. So suddenly 20% of oil production that runs through there has disappeared. As a result, the oil prices have gone right through the roof. And traditionally, when oil prices go up suddenly like this, we see recessions that can sometimes happen. I'll put some examples on the screen on times where that's happened in the past. Now, what that means is when these oil prices go up, there's a lot of uncertainty in the market because oil is something that we need in a lot of production processes. A lot of companies rely on that, and that causes huge uncertainty in the market. So looking at the markets in general, we've seen precious metals, which are traditionally seen as these safe haven assets and that go up during this period, actually somehow going down. This is as a result of the US dollar strengthening on the back of inflation. We've seen crypto in a pretty mixed scenario. Bitcoin going up somehow during this period of time and moving in very strange ways. And stocks generally in the red. So for most people who are watching, your portfolios probably took a hit. But the main point is this: the markets pretty much hate uncertainty. And when things are unknown, that's when things can go on the red very quickly and get scary. However, I want this to be a video for everybody to understand, to take a deep breath and understand that there's opportunity in this process. So for most of us investing, and if you're watching this video, you're probably in your 20s and 30s, you're investing, you've still got a small portfolio that you're trying to grow, and you've suddenly seen it take a hit. You're in stocks, you're in precious metals, maybe even some crypto, and you've just seen your portfolio go red. You've checked your phone and you've seen your portfolio number just go down. And it's a really spooky experience. And what's happening these days is we've got this amazing opportunity where we're able to invest money. You know, our parents weren't able to invest like this in the past. And today, with the click of a button, we can instantly invest in the markets and have this full access. However, with this full access, it also means we can exit the market just as easy. With a bit of panic and a bit of fear, suddenly people run away from the market and sell. It's this fear that stops you from winning in investing. Because investing, especially when you're at this age of 20 to 30 years old, the biggest thing on your side is time. That's what creates the compounding effect. We're talking in a span of 5 years, 10 years, not in the space of 1 month or a few days like what's happening right now. So people like scrolling on X, you're probably looking at the news right now and seeing all these people doing technical analysis. And I'm not against technical analysis, but just saying, you're seeing price predictions and everyone putting their opinions in, and it's really easy to get scared. But let's just zoom out a bit here. Let's just take a moment here. On this channel, we're not about doing trading. We're not about short-term gains. We're not about trying to pick the tops and the bottoms in the market. We're here for long-term investing. We're not like the average investor. The average investor does this. When the markets hit their top and stock prices are at the top, they start buying. That's what most US families are doing right now. They're buying stocks when they're at the top of their prices. And then when the price drops and suddenly you've got these discounts, that's when people exit and run away. If you're watching me and you're watching this channel, that's not what we're about. We're emotionless, cold investors. Our job is simple: be able to invest no matter what the situation is in the market and use the biggest asset that's on our side, which is time. Especially if you're in your 20s and 30s, as you stack your investments right now, time just works with you to create that compounding effect. So zoom out to that 5-year period. that 10-year period with investing. Don't be fearful of what's happening right now, because this volatility will probably continue for the next 2 to 3 weeks. Historically, this is going to continue. Happens all the time. Wars happen, crises happen. Everything's so unstable right now. We've got a dollar which is practically at failing point as we continue to print and print. And during this period, it's very easy to back out in the markets. But it's important that we stay strong no matter what. So, if you're in your 20s and 30s, you're investing during this period, and this period of crisis. This is actually the 4 things you need to be focusing on, despite everything that's happening right now. Number 1, and actually the most important thing, you need to actually be increasing your income. Despite what's happening to your portfolio, let's say you have a portfolio of $50,000, you're not going to be able to build a future and build financial freedom for that just yet. What builds financial freedom is the ability to have assets and investments that make enough income that you can live. In order to be able to build that much amount of assets, you need an increased income. You need to be making enough money to be able to cover your expenses comfortably and just to be able to invest in the markets. Investing $500 per month in the market isn't going to cut it anymore, guys. That's the reality of what's happening right now. The other thing with increasing your income that's really important is the idea of decentralizing your risk. With everything that's happening that's very volatile right now, the risk of losing your 9-to-5 job goes up dramatically. And that's something that I've taken precaution on recently. Right now I've got my 9-to-5 as a consultant, and that job's safe. I've also got a second job where I work as a data collector. And what I want to build, and what I'm trying to build on this channel, is a freelance business where I make my own income as a Power BI consultant. The point being that I've got safety and I've got my own source of income. That's what people need to be pushing to do right now in these periods of volatility. Not so much staring at their portfolio and trying to see if it goes up and trying to scringe around a couple of cents to make $1. You need to be looking to increase the income and building a freelance business. That's what really builds you as a character, builds your investments, and builds a future. The second thing, you need to continue accumulating real assets. I made this point partially, but investing $500 into the market every month isn't going to cut it. You need to invest real money right now. Now, I'm not talking overcommitting, and I'll speak about that in a separate point, where you still need to be investing despite what's happening in the markets right now. Remember what I said, the biggest asset on your side is time. And despite how bearish things can look and how downwards everything can look right now, in the long run, you're still going to be a winner. That's how markets work right now. We've still got the same problems. And that's what I say in terms of investing. It's still the fundamentals that matter in what you invest. So me personally, the assets that I like are gold, silver, and Bitcoin. That's not financial advice, that's my opinion. But the reason why is because the fundamentals are going to remain the same. We've got a failing dollar as the governments continue to print more and more. In terms of gold, we've got central banks that are continuing to buy huge amounts of this stuff, which means something's going on, and it provides protection in periods of volatility like we are in now. Silver, because of supply crisis issues, we've got more demand than ever in silver, and a structural issue in silver that's been going on for the past 6 years, not the past 6 months. And Bitcoin, because of its ability to protect us from a dollar crisis and its build as a perfect form of money. These are the assets which I like. No financial advice, but I'm looking to stack as much Bitcoin as I can right now during this period, especially at these prices where we've seen a 50% drop from its 120,000 and we're now down to 60-ish thousand. Number 3, don't panic sell. Listen, things are scary right now, I get it. And it's not great watching your portfolio go down as much as it has. I mean, trust me, I've looked at my portfolio, I've lost money. I can't lie to you. And it's not a nice thing to see. I would be lying to you if I didn't enjoy this. But selling is going to guarantee that you lose. At the end of the day, you don't lose as long as you don't sell. The mad thing is with investing is that even though you're in the red, that's not confirmed yet until you've locked it in. However, you wait you might be able to get that back. And that's the beauty of it. That's why time is actually on your side. In the long run, you'll actually be a winner. And most times, it's the patience that's the most important part in investing. And that's something which I think is really being lost right now. It's the patience that's the most important part. So right now for these deals, you should actually be buying up, not panic selling. And number 4, which is a sub point that I want to make, don't overcommit and have some cash on the side. Now, I know, despite everything that's happening, we've got a failing dollar, etc., you still need to have some cover despite what's happening. Only invest the money that you can afford to invest. You need to have some money on the side, like it or not. This is to cover yourself from anything crazy that happens, such as a job loss, or more importantly, what I'm looking to do, if the markets go down further, I want some ammunition to be able to buy more. Now, I'm not trying to pick the market perfectly, but I've got a feeling that if it goes down further, then I can buy my way in. And if I've got some cash on the side, which I've got committed to investing, then I can make that move. So what I'm doing right now is I've got X percentage every month, which I'm investing, and X amount that I'm putting on the side ready to go. Right now I'm trying to invest about 50% of my income, with my expenses being put to the side to cover that, and the rest kind of just being kept there as like a safety net in case something happens. And if the markets go down, I can also be aggressive and go in. So what it does is it provides you 2 things. Number 1, protection in case something goes wrong. Life happens, emergency expenses, you lose your job, stuff happens all the time. And number 2, if the prices go down further and there's a buying opportunity, I have the ammunition to be able to do that. So for the people that are watching, you've got to remember, I'm targeting people in your 20s and 30s that are trying to invest and trying to build financial freedom. At the end of the day, guys, the reality is this: we're not going to be able to build this over weeks, months, maybe not even a year, but over multiple years of hard work. We're not going to be able to build this suddenly and have our investments go through the roof. I'm sorry what you've seen on X. You might have seen some cool investment. You're scrolling through looking at technical analysis, thinking that something magical is going to happen. But the reality is patience is key. And we want to build this compounding effect as quickly as possible. That means being able to have an income that can drive these investments. So let's focus on doing what we need to do here, guys. Zoom out that horizon and look in the long term. This is a battle of many years, and we're going to get there if we're committed and patient to this. Build that income up, build that side investment, and build something that's reliable for you. Continue to accumulate assets. Do not panic sell despite everything that's happening, and have some cash on the side. Hope you enjoyed this video. That's the 4 things which I would do despite everything that's happening in these volatile markets. Guys, we'll be okay despite all of this. It may be scary, but trust me when I say, in the long run, this will be fine. And 5 years from now, we'll be laughing at what happened. I hope you enjoyed this video.